Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct. The numbers are out. The labour statistics analysts say could get consumer and business spending going again and boost the Australian economy have been released. But what does it all mean? I met with Rix Spooner at CMC Markets to give us the lowdown. Rick, Happy New Year to you. Thank you very much for joining us today.
That's a pleasure, Natalie. Happy New Year to you as well.
Thank you. Okay, so we're talking those labour statistics. The numbers have come in. Australian unemployment came in for December at 6.1% versus the previous 6.3% number. Are we celebrating the 0.2% today?
Look, yeah, this is good news, I think. There has been a bit of doubt about the ABS unemployment figure data, but the problems there have at least been partially corrected. And I think the strength of the figures we've seen in the last 2 months says that whilst the labour market here has got a long way to go, it certainly looks as though it's quite a bit better than the market had been thinking it was.
Now, some analysts have suggested that actually this outlook needs to get worse before we can see an improvement overall in the labour market. Does this outlook remain the same?
Today's data, I think, casts a bit of doubt over that scenario, although I think it's probably the most likely one. I think also, though, we're probably getting a bit closer to a turning point. I think the most likely situation is that we will continue to create jobs in Australia, but the rate at which we create them is still going to be a little bit short of the number we need to create to fully employ the growing population. So we may still see the unemployment rate, if not stay unchanged, perhaps tick up a little bit further yet.
Is this boost in the labour statistics, is that likely to translate into better consumer, business confidence and hopefully spending?
I think it will, particularly in the first instance, consumer confidence. We saw a pretty low reading there in December, but today's news, together with cheaper petrol prices, I think is likely to see that recover a little bit. And then in turn, I think, sets us up for a situation where improved consumer spending will probably help economic growth here next year. But I don't think we're going to see a return to real animal spirits. I think that underemployment still remains pretty high at 15%, and consumers around the world remain pretty cautious since the GFC, and indeed the weak retail sales figures we saw in the US last night are an example of that pretty cautious behaviour still by consumers around the world.
Naturally, if we're talking spending, that does bring us on to the Australian dollar. It's going to continue falling, that's no question about that. How far it goes obviously remains to be seen. But what are the clear drivers that we are seeing at present for this currency? What is going to be pushing it really?
Well, look, I've got a contrarian view at the moment. I'm not so sure that in the short to medium term we are going to fall much further. I think there's got to be at least a chance we'll see a bit of a consolidation and maybe a corrective rally from here for a while. If that happens, I think the drivers for it may be interest rate differentials. The market, I suspect, is now well and truly priced in the fact that the US Fed is likely to start increasing rates this year. But the weaker retail sales figures we saw last night suggest that the rate at which they do it may be pretty slow and pretty cautious. Opposed to that, I think the Australian Reserve Bank doesn't want to cut rates, and I don't think it will unless it really has to. And figures like the ones we saw today just reinforce that view. So interest rate differentials, I think, could see a bit of a recovery in the Aussie dollar against the US. But the big $64 question, the other key driver, is commodity prices. We've seen the Aussie dollar stay firm against a much weaker copper price in the last couple of days, But obviously if we see copper prices declining as they have in the last few days, then I think that would put the Aussie under pressure again.
Rick, thank you so much for your comments. Look forward to tracking your forecast this year.
That's a pleasure, Natalie.
Well, 2015 is certainly shaping up to be an interesting year. The Dukascopy TV team will bring you all of the latest in FX analysis and exclusive interviews. But for now, it's goodbye from me.